Okay. Well, good morning, everyone, and welcome to this morning's Zoom webinar presented by the Chamber of Commerce for Greater Moncton. The title of today's webinar is Combating COVID-19 with Resilience, Respond, Recover, Thrive. My name is John Wishart. I'm the CEO of the Chamber. Bonjour à tous. Bienvenue au webinaire Zoom de ce matin présenté par la Chambre de commerce pour le Grand Moncton. Le titre du webinaire d'aujourd'hui est la résilience pour faire face à COVID-19, réagacer, récupérer et viser la prospérité. Je m'appelle John Wishart. Je suis le PDG de la Chambre. We're very pleased to have with us today a trio of experts from Deloitte who will walk us through this brave new world that we are suddenly facing. So before I turn the virtual podium over to our presenters, I want to remind everyone that we hope to have a Q&A session at the end of the presentation where you can pose your question. At any time during the presentation, you can use the chat button, which is at the bottom of your Zoom screen, and just type in your question there and we'll keep track of them. And we'll try to pose as many as possible as time permits. Also, please note, we would ask everyone to mute your microphone, except for our presenters, just to make sure that things go smoothly. So with us today from Deloitte, we have Steve Lund, who is Managing Partner in Deloitte's Moncton office. Steve will moderate the rest of the discussion. And with Steve today are Katie Rogers, who is Atlantic Tax and Legal Leader with Deloitte, and Brian Steven, I hope I pronounced that correctly, and if not, I apologize, Brian. Steven, Deloitte's Canadian Working Capital Leader. And thanks very much for all three of you for agreeing to present today. So with that, I will turn that virtual podium over to Steve to lead today's discussion. So Steve, take it away.
Thank you, John, and welcome everyone. Thanks for attending today. I guess we've been in this for about 3 weeks. It feels like about 3 years. So good to get access to the business community again, and hopefully everyone is doing well. The theme today will be leadership with resilience. And so we'll have a focus on tax accessing, financing from new governments and subsidies, which change literally by the hour, working capital, how to keep the business alive, and also maintaining and creating value in this time of extreme uncertainty. And so it'll take place in a bit of a Q&A format. Certainly at the end, if you have any questions, you can funnel them through John, and we're more than happy to take a look. On an overall basis, what I would suggest is, the way we've been thinking about any crisis, and in particular this crisis, is in 3 phases. One is respond, second is recover, and third is thrive. You'll hear that theme throughout the discussion, throughout the presentation, and the whole point of thinking of it through that perspective is in the immediate term. When you're putting out fires, it's really hard to think about the medium and long term. And so the concept here is, responding is when the company deals with present situation and manages continuity. That's where most businesses that we're seeing out there are focused on right now. But that said, the second phase is then recover, and that's where people are starting to look to. That's when a company learns and emerges stronger once we get the virus under control. And third, of course, is thrive, where the company prepares for and shapes the new normal. I think it's important for CEOs and business leaders to keep their eye on the recover and the thrive phase. What we're seeing is a ton of innovation that's happening. I would argue that there's more innovation in the last 2 to 3 weeks than would have happened in the last 3 or 4 years, and it's born completely out of necessity. So it's interesting to watch that unfold. And, I think it's important that businesses think of preparing for that new normal. So with that kind of overriding theme discussion, I'll start asking some questions of my partners, Katie and Brian. And as I mentioned earlier, if any of the folks that are watching have any questions, do feel free to submit them through John. So I'll start with a question for Katie, because again, we're still in the respond phase. Katie, what would be the most immediate thing that people can do to maximize cash from a tax perspective?
Yeah, good question, Steve. So The most immediate thing that people can do is really take advantage of some of the announcements that have been made both by the federal and provincial governments across the country. And that's if you have any tax payments that are due, stop making them. The federal government, as well as Alberta and Quebec, have deferred the payment of any tax installments until August 31st. There's also been deferrals announced with respect to GST and HST that have been collected, as well as QST. Those payments don't have to be remitted until June 30th. And any companies that are paying customs duties, those also have been deferred until June 30th. So that's an immediate way to stop cash from going out the door. A lot of the provinces have also announced deferrals of other provincially paid taxes or fees. So for example, workers' compensation premiums or WorkSafe NB premiums in New Brunswick specifically have been deferred until June 30th. The employer health tax in Ontario. And so what I've been advising my clients is if there are any payments that you would typically be making to a government agency during this period, before you make the payment, stop and make sure that it actually is due and hasn't been deferred. The one exception, of course, is payroll. Payroll remittances are still due. We'll talk more about a wage subsidy in a bit. I'm sure it's on top of everybody's mind, but otherwise payroll remittances are still due according to the regular schedule.
Perfect. Thanks, Katie. So your segue skills are absolutely flawless because my next question is certainly the one that everyone is keen and eager to hear about. I know that you and the tax leadership across Deloitte Canada have just put out a new white paper that summarizes some of the key features of the 75% wage subsidy. I think rather than save it till the very end, why don't we just tackle it now? And maybe you can just explain some of the key features. And in particular, Katie, maybe some of the uncertainties that still exist, because I know that every day there's kind of new information that's leaking out there. So maybe you can just summarize that.
For sure. So I think the first thing I want to clarify for people is that there are actually two separate measures. For a while, there was some uncertainty as if the second announcement was replacing the first announcement, but we got some clarity yesterday that there still are two separate measures. So the first one that was announced was called the temporary wage subsidy, and it was 10% of wages up to a maximum of $1,375 per employee with an overall cap of $25,000 per employer. And that one was quite restrictive as it only applied to nonprofit organizations, charities, and Canadian-controlled private corporations that were claiming a small business deduction or were eligible to claim the small business deduction. So that took large corporations out of the mix. It took publicly listed entities out of the mix and any foreign-owned companies. And the amount was quite small, 10%. So that led to the introduction of the Canada Emergency Wage Subsidy, which is, I'm going to call CEWS just for ease of saying it. So that is much more lucrative, if you will. It's 75% of wages paid, and the restrictions are much less significant. So now, under this new program, the CEWS, eligible employers include all for-profit businesses, NPOs, and charities. So the only exclusion is public sector entities. However, the CEWS does include a new test, which is the 30% revenue test. So employers are eligible for the subsidy if they experience a decrease in their gross revenues by at least 30%. And the period that's used to determine that is it's done on a monthly basis. So it's going to be in effect for 3 months, starting March 15th to June 6th. And so those periods break down into 4-week periods. The first period runs from March 15th to, I think it's April 11th, and then April 12th for 4 weeks. And then there's one that starts and goes into June 6th. And so the first period, you would compare your monthly revenue in March 2020 with your monthly revenue in March 2019. The second period, because it starts in April, you would compare your April 2020 revenue to your April 2019 revenue. And then the last one, you would compare your May 2020 to your May 2019. So it's possible that an employer may be eligible for the subsidy in 1 month, but not in all 3 months. It could be that maybe you weren't feeling the revenue impact in March, but by April and May, you start to feel it. So you'd be eligible for it in those months. A couple things to point out with respect to what is included in revenue for the purposes of this test. There are a couple key things to know. It does include revenue from business carried on in Canada. It does not include revenue that is coming from a non-arm's length source. So if it's coming from a related company or related party, then it's not considered for purpose of this test. The revenue is to be calculated in accordance with your normal accounting methods. However, if there are extraordinary amounts, or if there are amounts that would be considered on account of capital, those can be removed for purposes of the test. The Department of Finance has announced that there will be some flexibility in the program, particularly for circumstances where a company may not have a reasonable comparison period. So let's say it's a startup company, they didn't actually have any revenue at all last year, then there will be some flexibility. And they suggested that perhaps comparing March revenue to February revenue might be a comparable period. So keep that in mind. If you have a unique situation, there may be some flexibility to look at that. They also announced that they will look at a more appropriate definition of revenue as it pertains to nonprofit organizations and charities. And they're looking at providing even additional support for those entities that are on the front line of the COVID-19 crisis. In terms of the amount, like how much will the subsidy actually be? So I mentioned that it is 75% of wages and remuneration paid to an employee. There is a maximum of $847 per week per employee. The employers are expected to continue to pay the other 25% to employees wherever possible, and they will be asked to provide documentation to support the fact that they can't if they are unable to. We're looking for more information on that as to what exactly that they would be looking for, but that hasn't quite been confirmed. When we talk about remuneration and what that 75% is going to be calculated on, it does include all salaries and wages and other remuneration. However, there are some specific items that have been carved out, including severance pay, stock option benefits, and benefits that are assessed for personal use of a corporate provided motor vehicle. The process for applying will be using CRA's website. A new application portal will be set up. It's expected to be up and running within the next 3 weeks, and then payouts will happen in 6 weeks. Mm-hmm. I do want to highlight that the Prime Minister and the Finance Minister have been quite clear that there will be harsh and severe penalties for anyone that is found to be abusing the system or taking advantage of it. Therefore, it will be really important to make sure that you properly calculate the 30% test before claiming the wage subsidy. If a company is not eligible for the CEWS because it doesn't meet the 30% test, it may still be eligible for the temporary wage subsidy, the 10%, if it's a small business. You're not allowed to double up, however, and an employer is not allowed to claim the CEWS for a particular employee if that employee has access to the Canada Emergency Response Benefit. And that's the benefit that was announced by the federal government, whereby an employee that's been affected by COVID-19, either by being unemployed or still employed but no income because of COVID and being at home, if they're claiming that $2,000 a month benefit, then the employer is not able to claim the wage subsidy for that particular employee. I also should note that the wage subsidies are taxable income for the employer. So this means that they will be included in taxable income and tax will be paid. And then if you are claiming a federal tax credit that's based on wages, for example, a shred credit or an apprentice credit, then the wages are reduced by the amount of the wage subsidy that is received.
Excellent. Well, thank you for that very comprehensive analysis, Katie. I know that was, we've been speaking to clients kind of constantly for the last 2 to 3 weeks, and lately that seems to be the area that everyone is understandably very keenly interested in learning more about. I have a couple of additional questions that maybe you can either shed some light on, or if there's still uncertainty, we can share that as well, because I suspect we'll continue to hear more information about it.
Sure.
So one, if I think of the kind of normal Moncton Chamber events that we're always attending with John and friends, there are a fair number of NPOs that are kind of quasi-public sector. Maybe they receive most or all of their funding from a province or a municipality or something like that. Do you know, and is there any guidance as to whether they can be considered a public sector entity and then can't get access to any of that funding? Or is it gray, or is it obvious that they can get it if they are a legal NPO?
That's a really good question. I haven't seen how they are defining public sector entities for purposes of the test yet, but it's certainly something we can keep our eye out for. And there are a number of questions that have been flooding in since the announcement yesterday, and we're compiling all of them, and we have our opportunities to ask our questions of CRA and the department.
Yeah, I think that'll be an interesting one, and I'm not surprised that there are a few kind of very specific questions that'll come out, because as I said, it feels like every day is about 2 months in this new environment. So this only just came out a few days ago, I suppose, and now we've got so much clarity. So and then question 2, let's see. Get the public sector one. So one of the questions that I've been speaking with clients about this morning is this kind of 30% revenue test. So is there any guidance that CRA is putting out there for companies that are close, companies that might have some accounting situations where both answers might be right? Is there an overriding kind of theme that CRA has put out there, and how they would kind of penalize abusers of this program or anything like that?
So I would say that the guidance that we have right now is that you should use your regular accounting methods. So I don't think they would be open to people changing their accounting methods. But as we know, in accounting methods, sometimes there are decisions that need to be made to use the best information available to you. I would caution that, it has been quite clear that penalties will be severe, so I would be a bit careful about that. We don't know what they mean by that, because there haven't been any details announced, but that would be my one caution.
Yeah, thanks, Katie. And I just wanted to clarify that. I think, having in a time like this, it's important to keep your mind on the right ethical principles. And I think if you're trying to do the right thing, then that's probably the right answer. And then one more question on tax, and then we'll get to Brian about some value creation and protection. Why is it important for companies to be thinking about tax in relation to COVID-19? I think the government packages are obvious, and it's hard to, normally taxes you're paying to the government. This is in the opposite direction. So it's hard to say if that's tax, but thinking about tax generally with COVID-19, and this is probably more thinking in the medium and long term, why is that important for companies to keep their eye on that ball?
Yeah, that's a good question, Steve. And I do have a slide prepared that I'd like to share. And while that's coming up, I'll say what the overriding theme is as it relates to tax, is that because of the depressed values and losses that many companies are likely experiencing as a result of COVID, there may be some tax planning opportunities that could result in access to quick cash. And as you mentioned, there's also been a lot of stuff announced with respect to taxes from the different levels of government. And also it's kind of a good opportunity to step back and look, like, now that values are low, are there opportunities to do some restructuring that may provide enhanced returns in the long term for both the corporation and at the shareholder level? So I sort of break it into 4 categories. Those categories, how do I maximize my current cash? How do I get more cash in the door now? How do I minimize what's going out and then take advantage of the government funding and think long term? On maximizing the current cash, this is looking at how do I get cash in the door. So what I've been looking at with my clients is, do I have any clients that haven't yet filed their 2019 tax return but overpaid their installments for the year, so they're going to be expecting a refund? Let's get that filed as soon as possible so they can get access to that refund. If they're in a loss position for 2019, let's also get that filed right away, because they may be able to carry that loss back and recover taxes that were paid in other years. And also just looking within the organization itself. Sometimes there are international organizations that parent company is in Canada, and there's lots of cash sitting in foreign subsidiaries. So I've been working with some of my clients on strategies to get that cash back to Canada. And then also I have some clients that have life insurance policies within their company with a cash surrender value, and there are some tax efficient ways to gain access to the cash that's locked into that policy. On minimizing the cash outflows, as I mentioned right off the bat, just stop making any tax installment payments in the immediate near term. I mean, keep in mind that those payments will still be due, but they don't have to be paid immediately. But I think it is important that people do keep in mind that they will be due, and that catch-up payment will be due in September as the rules currently stand based on current announcements. There's also other ways to look at minimizing the cash outflow, and most people would look at some of these things from an HR perspective, like workforce restructuring and top-up benefits, but many of these programs have a tax lens to them. So we've been working with some of our clients through that process. We have some employment lawyers as part of our tax and legal group, and I've had many conversations with them, and they've been extremely busy, as you can imagine. And then also, when preparing your tax return for 2019, looking for opportunities to maximize deductions to the extent possible to either reduce any current cash tax that may be due, or to increase the loss that you could carry back to recover tax from prior years. And one of the hot areas there that people are spending a lot of time focusing on that they may have brushed over in the past is doing a really deep dive on their asset classification, looking for moving assets into a class that can be depreciated more quickly, and looking at reserves for accounts receivable and inventory. The third bucket is government funding, and I have another slide we'll look at after this that'll just break it down, and I'll give you a bit more information on each of the programs. There are so many, so it'll be very high level, but of course, if anyone has any questions or wants more information, I'd be happy to provide it. The one thing I want to point out is that it's really important to think about at what level is the government funding available, and not to miss out on funding that may be available at a local level, even at a municipality level. And if you're an international organization, staying on top of all the global grants and incentives, because they are just adding up fast and furious. And I know as a firm, as a global firm, we've been able to get our arms around that a bit, and we've got a website set up now that is tracking all of those. And then the last one on the long-term planning, one of the things that I often recommend to my clients, especially in a time like now, is if you have a lot of retained earnings built up in your company, now is a good time to do a creditor proofing dividend to protect those assets from any creditors. It's also a good time where values are low to have another look at estate planning. There may be an opportunity to do an estate freeze or a refreeze that could be very beneficial in the long run. From an international perspective, if an entity had been considering looking at setting up some offshore, or not offshore, but international jurisdictions like lower tax rate jurisdictions, and selling parts of the business to a different jurisdiction, now might be a good time to do that while the values are lower. And then finally, and this is always on my list of things to consider, is corporate simplification. Anytime you can reduce the boxes on your org chart, it helps to reduce overall administration costs. So if we could just flip now to my next slide, which is the government funding. I wouldn't mind taking everyone through this at a high level. So I've broken it down into both federal and provincial measures, and then I've categorized each of the programs and incentives into 5 buckets. So the first one is improving cash flow. So these are measures that were announced that will help improve cash flow immediately, and most of these are the deferrals that I've previously mentioned. The second category is savings. So this is the subsidies, the credits, the grants, things that are true savings and not just deferrals. The third one is access to financing, as there have been a lot of programs announced where there are new loans available. The fourth is administrative relief, which is basically extensions of filing deadlines, something to just ease the burden for the businesses as they're working through the crisis. We've also heard from most of the tax authorities that they're suspending a lot of their audit activity, which is nice. Mm-hmm. And then the last one are the measures that are related to employees. Some of them are targeted at the employer level, and others are specific to the employees. And I think it's important for employers to know what those programs are that are available for their employees as they think through and make some tough decisions. So just starting with the federal measures, the CRA relief ones I've covered off. Those are the deferrals and the administrative relief for the extensions. The government agency funding relief, So there are a number of programs that have been announced. Most of them are being administered through BDC and EDC. And the way that you apply for them is by contacting your primary financial institution. I will note that if you do have a loan with a COA or any other regional development agency, you can defer those loan payments for up to 3 months, and you would work with your program manager to figure out what the repayment schedule looks like after the 3 months. We talked about the wage subsidy, so I won't go into that in any more detail. And then the employee support program. So there have been some changes to the work sharing program to ease the requirements to allow more employers to take advantage of that program during this time. There were also announcements with respect to helping those companies that are directly supporting the fight against COVID-19. So what I mean here is those companies that are actually doing research and development or are supplying goods and services that are helping in the fight against it, such as personal protective equipment, ventilators, helping. I know we've heard in the news a lot about companies that are changing their manufacturing facility from producing whatever it was they were producing to producing hand sanitizer. There are portals set up online. I know there's at least one on the federal level in Ontario where you go on, you put in some information about your company and what it is you can contribute to the cause, and then they'll reach out to you and you can determine what support is available. And then the last one is the customs measures, which is again deferral of customs duties and some administrative relief. On the provincial side, I'll focus mostly on New Brunswick. I think I might have mentioned a lot of them, but they have deferred the workers' comp premiums, as I mentioned, and also any provincially issued licenses, registrations, permits, and certificates. If they were expiring by March, those have automatically been extended to May. So that's something to keep in mind, as well as repayment of any provincial loans, those have been deferred. And for employees, there is the one-time $900 benefit for those that are experiencing loss of income due to the COVID-19.
Perfect. Well, thank you very much for that, Katie. And so lots of information, folks. If you want to find any of this stuff after the fact, you can just go on Deloitte.ca and there's a link to COVID. You can click on there and there's a ton of thoughtware that's coming out, something coming out every day for sure. So feel free to do that. Or if you want to just reach out to John, he can connect you to me. Before I move to a question for Brian, just wanted to note that we almost had another special guest star, my cat Marvin, tried to jump in the picture. So I think the new conference call etiquette is that it's okay for dogs, kids, and other stray people and animals to bark or whatever it is that they do during conference calls. So you may see him again, who knows. So let's go to Brian now. And for those of you who don't know, Brian sits in Toronto, but he does spend a lot of time in Atlantic Canada, in particular in Moncton. He's a frequenter of Tide and Bore and Gahan House and Pump House with me a couple of times in the last few months, so you may have seen him there. And his focus is on value creation, value preservation, and working capital. So Brian, maybe just as an opening question, if you look back, 5 to 6 weeks versus 10 day in the last 10 days, how have client actions across Canada been changing with respect to the COVID-19 impacts?
Thanks, Steve. Maybe before I jump into the question, thank you all for joining us this morning. Appreciate the opportunity, Steve, Katie, and myself. For the next 20 minutes or so, I'll share some insights that I've seen with other CEOs, executive teams, as well as some tactical plans. It's obviously been an interesting ride the last, let's call it 6 to 8 weeks. Initially, when this epidemic came out, a lot of our clients were focusing on the business continuity plans. Those plans were split between, I would say, back office and front office. Back office was really just giving them the tools and the technology so that they could work remotely, so that the business could survive. From a front of the office perspective, the focus was on employee safety, ensuring those folks that were still seeing the public had access to medics, health and safety equipment. There was a change in operating hours. So if you were in the grocery business or in the operating business, there was a change in the hours. And then there was obviously a big focus on disinfecting facilities. Other key steps that were taken during the business continuity plans were a focus really just on the critical businesses, whether that be by customer, by product, whether by geography. There was that focus or shift in that focus. The important thing was around looking at cross-training of your staff in the event of any absenteeism or anyone that had to go into isolation, ensuring that their role could be fulfilled by somebody else. And then another key tactic that we noticed was all of the key policies and procedures were documented. Again, just in the event that somebody had to spend some time away from the office, there was some cover. So the initial focus was on business continuity. I would say to you, because at the time nobody really knew how long this was going to last, there was some focus on cost containment or cost reduction, but it was really just at the discretionary spend level. So taking out, let's call it the quick wins around hotel spend, entertainment, flights, etc. Some of that was actually, you just couldn't do it anyway. If I shift now to maybe the last 10 days or so, I would say to you there's been 3 key themes that have come out. The first one would be around scenario planning, your 13-week cash flows. Most of the clients I'm working with are putting together 3 scenarios. Let's call it a best case, middle ground, and a worst case. The second big theme is around cost containment. So now moving beyond the quick wins and where are the opportunities, and looking at both from a payroll and a non-payroll perspective. And then the third one would be around working capital optimization and cash management. So not many of us or any of us expected this pandemic to last as long as it has, and it's most probably going to continue for quite a long time based on some of the economic views that I'm seeing. So cash is going to be a shortage. So there has been that shift in mindset on how do I optimize my working capital. Yeah, so all in all, Steve, I think, the last 10 days, really those key 3 themes: the scenario planning, the cost containment, and the working capital optimization.
Any thoughts, Brian, on what the new normal looks like?
Wow, tough question, $1 million question. Yeah, the new normal. Couple of the clients that I'm working with at the moment are looking at what does the workplace of the future look like. When I talk about that, we've all now got better at, I'll use the word better at working remotely. Is there an opportunity to do more of this in the future? What does your footprint look like? Do you truly need all the facilities that you have? A number of my clients have started, you spoke about innovation earlier, the shift to online e-commerce channels is becoming obviously more important. Even from a supply chain perspective, I work with a number of manufacturers and retailers, and the conversations are starting to shift from globalization to, do I have a supply chain that's more local? So these are some of the topics or the themes that are being discussed, but honestly, not many of them have been sort of polished out or thought much further.
Mm-hmm. And just going back to your point earlier, and Katie, I can ask the question to you as well. Any examples on tactics adopted for scenario planning, cost containment, working capital optimization, in addition to what you've already said to the group?
Yeah, sure. I'll jump in there. Why don't I talk about employees first, and then I'll move into non-payroll expenses. From an employee perspective, many of my clients in the manufacturing space have eliminated the need for temporary or contract labor. That is, you're able to do that with pretty short notice, and usually there's no penalty involved. So that would definitely be one area. The next comment is most probably going to be pretty obvious, but believe it or not, I actually have seen some clients that are not there yet. So from a hiring freeze perspective, those should be in place. I would even go further to say to you, any positions that haven't been backfilled yet should not be backfilled. But I also do want to talk from the other side of the coin, where I've seen some of my clients actually take advantage of the current situation and have been able to attract good talent that has been let go from some of their competitors. So something to think about there. For those of my clients who are essential services and operations are still up and running, there are a couple of tactics that they've put in place. Asking individuals to take voluntary time off. An example that I could give you is, I have a client who's asked their staff to take 4 weeks unpaid leave over the next 6 months. We have clients asking their staff to reduce their pay. Some of that is anywhere between 20 and 30%. Clients are looking at staggering shifts, reducing weekly hours. From a learning and development perspective, many of my clients have put learning and development on hold. Again, I'll speak from the other side of the coin. I do work for a number of airlines, and when it comes to training and development, there is some training that is compulsory, so you're unable to get out of it. So for example, the captains have to continue to do their hours. So yeah, there is some opportunity from learning and development perspective. Defined benefit contributions. Some of my clients have taken the decision to not to contribute to these pension funds in the meantime. So yeah, I would say those are a list of common tactics that I've seen from an employee perspective, Steve.
Okay.
Katie, I don't know if you have any others that you'd want to add on. If not, I'll just jump into the non-payroll ones.
Yeah, I don't really have anything to add. I've already mentioned what I've seen most of my clients doing with respect to deferrals and modeling out when installments are going to come due. What is it going to look like? How much are we going to have to fund that?
Yeah. So from a non-payroll perspective, I touched on it a little bit earlier about stopping the discretionary spend. If you haven't done that already, I would definitely look at that. The next one is pretty interesting. It's sales and marketing spend. A number of my clients have reduced the expenditure here. Haven't fully stopped spending, but what they've done is they've redirected the spend to different channels. So one of my clients is in the hospitality business, and they used to advertise on virtually every channel, whether it be the radio, the newspaper, the TV, etc. What they have found from some of the analytics that they've run is right now the newspaper and the radio is not getting the most audience. It's actually the TV, and they've redirected their spend towards the TV and more on the news channels. So that was pretty interesting. Most of us would know that conferences and trade shows have been cancelled, whether you're hosting them or whether you're attending them. A number of my clients have reached back to those conferences and asked if they could get a refund. If you're in that business, I can tell you most of the people are saying, well, you get a credit for the next session, so it's a little bit difficult. From a repairs and maintenance perspective, if that is an expense on your P&L, I've seen clients take two approaches here. The first one being I've chosen not to do repairs and maintenance other than that which is critical to the business. And those that are in a pretty good position from a cash reserves perspective have actually taken advantage of this lockdown period and completed all of their repairs and maintenance, or in the process of completing it. With the madness being that when we get out of this on the other side, the business is ready to run and there will be no stoppages. So yeah, again, two different approaches. And then most probably the last one I'd speak about from a non-payroll perspective would be around CapEx projects. Different approaches here as well. CapEx projects which haven't started, unless they are truly going to add to the critical business today, are likely not to start. And any of those CapEx projects that are on the go but are behind from a dollar perspective or a timing perspective are being reviewed and in most cases being stopped. Maybe just the last comment I'll make on cost containment before I move into working capital is what I would suggest is, or what I've seen quite a bit is clients are taking their spend and they're doing an analysis between fixed and variable. Again, it sounds pretty simple, but what they are trying to do is from a fixed perspective. You talk about the new normal, Steve. It's how do I move my fixed expenses down? Do I move from owning to leasing and renting? Is an obvious example. And the reason why this analysis is important is you're actually looking at ways to reduce your cost to obviously bring down what is your break even. So just some tactics that some of my clients are putting in place.
Mm-hmm.
Yeah. If you don't mind, Steve, I'll jump into the working capital. Yeah, so a passion of mine, you know, I would have said to you 12 months ago, most clients would have said to me, Brian, you know, working capital is something that I put responsibility into my CFO and my finance teams, and I do hope that they manage it better. Well, in the last 10 days, it's been crazy to say the least. You know, and again, it's not because CFOs and finance functions have not and cannot do this. It's just listening to what others are doing. So some of the examples I'll share with you now are really just a combination of what I've seen. I'll start with accounts receivable. Obviously, it's not easy to drive cash coming in. Most people are doing the same thing and holding on to their cash. But there are some tactics that you could put in place. The first one would be, if you are sending out your invoices, make sure that they're being sent out accurately and on a timely basis. Don't give your customers a reason not to pay. So I would definitely suggest that you look into the invoices going out. The next one is around discounts. If you have a discount policy in place, consider maybe giving greater discounts. What I have seen is some customers are seeing it as an economic benefit, taking the additional discount and paying. So it may be something for you to contemplate. Obviously, you need to do the scenario planning around it to ensure that it makes sense for your business, but discounting is one. A number of my clients have done what I would call sort of root cause analysis around the dispute process. So understanding why are invoices not getting paid, and if there's a common theme or themes there, rectifying that so that you can, you know, hopefully improve the collection process. And then the last one that I'd put under accounts receivable is ensure that your payment channels are working. I know that sounds like a crazy statement to make, but one of my clients is in the retail business, and they have an online payment channel, and it was down for 2 days. You know, it significantly impacted their business. Whether those customers come back to make that payment is still to be seen. So I would just, you know, ensure that your channels are working. The other thing I would say to you is, if you haven't, or if you currently don't take credit card payments, it's probably a good idea to put that in place. Again, just take into account that there are credit card fees attached to it. So that's a little bit around accounts receivable. I'll push on to accounts payable. A number of my clients, let me choose the right word here, or requesting, maybe the right word is demanding, 15 to 20% deductions of all invoices. I would just, well, my advice to them is I would just be careful in doing that. I would do some analysis around it. Who are my strategic vendors? Who are my non-strategic? Because when we do come out of this on the other end, you don't want to have destroyed relationships. We've all got to work together through this. So just, you know, communication is probably something I should have said up front. It's critical to have those communication lines open, whether it's with your customers, whether it's with your vendors, whether it's with your lenders. Just being transparent. Like, we're all in this together, so, you know, nobody enjoys surprises. From a payment schedule perspective, I think it's the old trick, and we saw it in the 2008, 2009, delaying payments. Again, I just want to emphasize the importance of, everyone can prioritize payments. I'm actually working with a gold mining company at the moment, and they've got in place a prioritization schedule where they're paying X amount every week. But one thing I would credit that CFO with is, before he makes a decision, each one is around, what is the strategic importance here? If I don't make this payment, what happens to my business next week or the week thereafter? So yeah, just being smart around prioritizing is important. And then the last one, which may come as a bit of a surprise or a shock to you, is around supply chain financing. There are a number of banks out there that are offering this, so really a discounting or factoring of your vendors. It's a win-win for everyone. It's a win for your vendors. They get paid earlier in some cases, and you as your company gets extended terms. So something else to think about. Steve, if you don't mind, maybe I'll just use another 2 or 3 minutes just to talk about some other cash tax tactics, if that works.
Yeah, please do, Brian.
Yeah. So a number of my clients have taken the decision not to pay out dividends. Their shareholders have come back and said, they're supportive of that. Let's use those funds to support the business. So there's one thing. I've had clients who historically have been pretty good with share buybacks. Again, there's two approaches here. Some clients have stopped that completely, saving the cash for other things. But then there's other clients who are saying, take advantage of the low share price at the moment. So something to think about there. Katie touched on it, where there's an opportunity to withhold taxes is another area that I would say I've seen a bit of. And then there's probably the last one, which is kept Katie and myself pretty busy the last 5 days or so. It's just looking at those government programs. I'm the first to admit I'm not fully into the details on it, but there are two that my mid-market clients are taking advantage of. There's a $2 million working capital loan which EDC and BDC are offering. The application process is relatively simple. And then the second one is, and I hope the numbers haven't changed since I last looked at it, is the BDC and EDC are guaranteeing up to $6.5 million of a loan that you would currently have with another lender. So yeah, so those are just some ideas, and happy to take questions. But yeah.
Thank you very much, Brian. So it's easy to see why Brian's a sought-after guy. He's got a lot of creative ideas, in particular in a time of crisis like this, that would be unique. Just a reminder for those watching it on the phone, if you want to send any questions to John, we'll be opening up for Q&A in just a couple of minutes, so feel free to send them his way. And maybe just a couple of parting comments before we jump into that on resilient leadership. In particular, this is mission critical at this time. So I'd say, 5 kind of characteristics that maybe leaders should think of, CEOs and owners and such. One would be designed from the heart and the head. In a time of crisis, the hardest things can often be some of the softest things. Resilient leaders need to genuinely, sincerely empathize, walk passionately in your employees' shoes, but also keep the health of the business top of mind, and you're going to have to make some tough decisions. So that's number one. Number two, put the mission first. Resilient leaders are skilled at triage and focus. I know personally, as we're working from our home offices, there's a lot of distractions, and the new working normal becomes a little more clear. Keeping that mission top of mind is going to be very important. 3, aim for speed over elegance. I think this is becoming more obvious as the days go on. Resilient leaders take decisive action with courage based on imperfect information. Right now, no one has all the answers. There are no silver bullets. And so you just have to make a tough call and go with your gut sometimes. Number 4, own the narrative. Resilient leaders seize the narrative at the outset, being transparent about current realities, in particular when you're having difficult conversations with your workforce, with your suppliers, with your partners. And finally, number 5, embrace the long view. Resilient leaders stay focused on the horizon. It's really easy right now to get stuck thinking about short term. So I would advise people, make sure you're keeping an eye on the long view as well. So maybe John, with that can kind of conclude our prepared remarks. But we've got about 10 minutes left. So if you want to fire any questions at me or Katie or Brian, we can take those now.
Great, thanks, Steve. That's a great recap. And thanks also, Katie and Brian. As Steve mentioned, you can use the chat button at the bottom of your Zoom screen to pose a question. I'm going to start off with a question of my own, if I may.
Yes.
And I think this is probably Katie's area. Katie, you mentioned something that I didn't know until you mentioned it, is that it's not possible to access the $2,000 Canada Emergency Response benefit while you're waiting for the 75% wage subsidy. And I think a lot of company owners or operators are on the call today thinking, okay, it's going to be at least 6, maybe up to even 9 weeks before I get a check of that 75%. So how do I bridge my employees in that period?
Yeah, that is a good question. And just to be clear, I don't know, maybe I just misunderstood the way you said it, but the employer can't claim that subsidy if the employee is claiming the benefit. Is that what the way you understood what I said? So an employee who is not working right now or doesn't have any income can claim the benefit, and then that will preclude the employer from claiming the subsidy.
Right. So that's deducted from the 75%, basically.
I believe there will be a mechanism in the calculation. I'm not sure exactly how they'll factor that in, or if you would just exclude the employee when you're calculating the 75%. Yeah.
Do you know if that would also apply to the emergency $900 income support from the province?
I don't believe it does. I haven't actually seen the legislation yet, but based on what was in the press release and what's currently on CRA's website, I don't see any carve-outs for that.
Mm-hmm. Okay, one more of my own questions. I know here at the Chamber, when we report our financials, we have our operating revenue, and then we have a separate line for investment income,
Mm-hmm.
and then total income after that. Are we allowed to claim or compare the investment income loss versus gain in our calculation of 30%?
So the guidance currently says that any income on account of capital is excluded. So I would say that investment income would be considered income on account of capital. So that wouldn't be included in the test.
Okay. We have a question from somebody who here. Can you talk about the emergency care benefit if an owner pays himself by dividend? Does dividend income qualify for the $5,000 test?
The emergency response benefit, is that the one?
Yeah, I think that's what the questioner is referring to.
I'll have to take that one offline. I don't know the answer to that one right off.
Yeah.
If you could take a note, John, of who has the question and forward it to me, I'll make sure we get them a response.
Yeah. I should point out to everyone on the call that today's webinar is being recorded, and it will be posted on the COVID-19 page that the Chamber is managing. And especially, I'm still looking at Katie's government programs and incentives checklist, which I think is very helpful. And somebody's asked if the slides could also be made available. So maybe Steve, through you, they could access that.
Yeah, I see that my friend Susie asked that question. So Katie, is that in one of the white papers that we have on the website? These two, your two slides, or is that an internal thing? We can share them, but just that might be easier.
Yeah, we can share these slides.
Yeah, perfect. Yeah.
Okay, next question. The Finance Minister, Bill Morneau, said yesterday that the CEWS is aimed at encouraging employers to hire back their employees. Would employers be eligible for a subsidy when employees haven't been laid off yet?
Yes.
Okay. Next question. Can we apply for the 75% wage subsidy at a later time for an employee that was laid off and is claiming EI now? I have staff I'd like to bring back about 4 weeks before we open up again.
So the period is currently running from March 15th to June 6th. So if the employee is brought back in that period, you'd be able to claim a subsidy for them for the time that they are back within that period.
Okay. Somebody has asked, if you have not laid off your employees, they are being paid the same as they always were. Do they qualify for any of the individual benefits?
No, if they're receiving the same compensation that they were prior to the crisis, then they wouldn't be eligible for any of the relief benefits.
Okay. Here's another one just came in. How do charities prove a revenue loss, since a lot of our revenue is from fundraising events that take place in the coming months? Yeah, the chamber's in that bucket too, that are now canceled, and the funds are only collected a few months after that.
Yeah, I suspect that the Department of Finance recognizes that things are quite different for NPOs and charities, and they've acknowledged that, but they haven't said exactly what they'll be looking for in respect of a revenue test. So I would, just keep note of events that are canceled, etc. And I have a feeling they're not going to be too strict with NPOs and charities, but we'll hope to see more guidance on that in the coming days.
Yeah, John, I asked Katie and some of our other tax leaders a whole host of questions around this 30% test because, as an accountant, I just thought of all the ways that you could end up in a gray area. And so one, feel tempted to take advantage of it if you're faced with laying off people in the alternative, or if you've got legitimately very close items that really are you put two accountants and one would come to one legitimate answer, one would come to the other. I think like never before, this will be an area of complexity, and I don't think there's any right answer, but using the ethics as your kind of guiding principle, I think that's the way that CRA will likely interpret this.
Hopefully there's a little bit of compassion built into the decision making, Steve.
Yeah, exactly.
Next question. So just to confirm, CRA will be cutting checks for the CEWS, or will it be a combination of cash and reduced remittances?
So my understanding of the way it works is that you will receive a check for the CEWS. If you are instead claiming the temporary wage subsidy, that is a reduction of payroll remittance, as it was formally announced.
Okay. Next question says, I have the same question that Jessica had regarding dividends. The shareholder of a professional corporation takes a dividend instead of a wage, and from what I have read, the $5,000 of income in the prior year needs to be employment income. Therefore, he or she isn't eligible for the $2,000 per month federal benefit.
Yeah, that's similar to the one that I was mentioning before that I don't know right off, but yeah, I'd be happy to look into.
Okay, we'll capture all these questions for some follow-up and clarification. Don't know if there are any there. I have one question for Brian, and he kind of mentioned this throughout his presentation. Right now, I think everyone on the call is coping and doing some crisis management to make sure that they survive. Once we get through this dark period and we start to focus on the thrive part of the equation, what are sort of the key building blocks for an organization or a company to enter that phase, to basically think about restarting normal operations?
Good question. Currently working with a number of portfolio companies of private equity funds, and the focus from a revenue perspective has been, where am I going to play, first of all? So what markets am I going to play? What are my products? What is my strategy from a pricing perspective? So there's an area to think about, because I think many of the clients today have realized that they most probably need to contract and focus on what they're good at. The quality of the customer is come up quite frequently in these conversations. So customer segmentation exercises are being done to determine who is the customer of the future, what is it going to cost to serve. I touched on it briefly during the conversation around better understanding your spend, so doing that fixed versus variable analysis. And then the last comment I'd make is around business models. So what does your model look like going forward? This from a supply chain perspective, from a workforce perspective, whether you buy or you rent. So these are all the key things, John, that clients are looking at. In building out their forecasts, I can tell you that they've built them out. I mentioned the 13-week cash flow, which is, I'll use your words, to get us through the dark period. But when it comes to building out the Thrive piece, we've got 3, 6, 9, as much as 12 months, and then just layering on the growth thereon.
Okay, thank you. One more question here in the queue, and this is one that's near and dear to a lot of business owners. Is there any further information in regard to rent relief instead of rent deferral? The stacked debt of back rent will crush a lot of companies, so I'm wondering if there's any discussion out there.
I haven't seen anything on rent relief. I don't know if, Brian, you have come across anything.
No, I haven't. And again, just spending a lot of time in retail hospitality. A number of my clients have just been upfront with the landlords and gone to the landlords and said, you know, we're in a difficult spot. What are my options? Obviously, know your legal agreements. In some cases, the landlords have been pretty hard and have closed the buildings without giving access. In other cases, landlords have actually said, you know, we understand the predicament that you're in. We're willing to give relief for the next 3, in some cases I've seen 6 months. Just be careful on the back end of that your rent is not changing. So yeah, that's why I suggest do bring your legal counsel with you to those conversations.
John, I think I did see something in Nova Scotia in the last couple of days where there was some relief to the landlord if they were, if it was proven that they won't be able to collect any rent over the next 2 to 3 months, something like $5,000 per tenant or something.
Yeah,
we can check the details on that one, but that's the only one I saw, and maybe something in Ontario. So I think it was 2 provinces out of the 10 have put something out.
I think both Nova Scotia and PEI have a rent deferral program.
Yep.
The tenant can defer rent for 3 months, and the landlord will be compensated by this fund.
Mm-hmm.
But it pushes the rest. The deferred rent will still have to be paid later in the lease term. Yeah. And I think that's something a lot of companies are grappling with. Deferrals and even zero interest loans still mean that you're going to have to pay later in this period, and that's the difficult thing. Yeah,
in 6 months, you know, working capital is going to be a really challenging thing to work through. You think of, you know, folks that have decided they're going to not pay their power bills, so that's all going to pile up. Rent, all their, you know, taxes, HST payments. You know, once you get to 6 months out, you're going to have all this stuff. Now, I guess the encouraging thing is if everyone has it, then there's certainly going to be ways to get through this that I'm sure, you know, our government, our business leaders will come up with, and innovation hopefully will rise to the challenge. Right. Something to keep an eye on is it's one thing to get through the next 3 months maybe, but like you said, 6, 9 months out, there'll be a reverb to worry about maybe. Yeah, absolutely. Okay.
John, there was a slide that I don't know if we have access to it, that if we could put it up, which outlines some levers to pull. What we've done here is we've split the slide into two sides, I guess. On the left-hand side, we've got the value preservation. So these are the tactics that many of our clients are taking at the moment as they respond and move into recovery mode. And then on the right-hand side is the Thrive. So further to your question a little bit earlier, just there's some ideas that that clients could or should be thinking about. Yeah,
great point, Brian. I think that's
it. So John, if I can ask a question of you, actually. In spirit of your Love Local campaign that I think is really important, I've been in, we opened the Deloitte office about 5 years ago, and one of the main things I love about Moncton is our local attitude. So I just got my beautiful new glass whiteboard for my office from Dennis Office Supplies. But wondering, what you can share with the business community and with Katie and Brian and I about the Love Local program and
Right.
how we can encourage people.
Sure. So we developed the Love for Local program with 3+ Corp and Brainworks. And it really is just an online platform to try to give any local business that's conducting any degree of business in this period a chance to connect with their customers. And it's really taken off. I believe we have close to 200 businesses now that have advertised their goods and services. You mentioned that there's probably been more innovation in the last 3 weeks than there might have been in the last 3 to 4 years. And it's evidenced on that platform. People are really finding unique ways to try to keep some cash flow coming in.
Yep. Awesome.
I love that.
So you can go on our website or the Facebook page, Love for Local, and find details of all those companies. So glad to see you continue to buy local there, Steve.
Certainly.
Okay. I think with that, it's it for today. So I'd like to thank again the team from Deloitte, Steve, Katie, and Brian for sharing their knowledge. Our next Zoom webinar will be tomorrow morning at 10 a.m. It's going to feature Scott Beck of Beck Tech, and he's going to be talking about the importance of working safely from home and avoiding all these new spam and hacks that have unfortunately crept up as we communicate virtually. So you can register for that webinar still at ccgm.ca. And if anybody has any other ideas for webinars that we could present during this period, we'd love to hear from you. With that, thanks again for attending today. Merci beaucoup, and stay safe and have a good day. Bye for now.
Thanks, everyone.
Thanks, everyone.